Welcome to the Industry Leader Update by Reverse Focus. In this week's edition, we interview the CEO of American Advisors Group, Reza Jahangiri, and we'll be discussing the changing marketplace and also the new approaches of working with borrowers and the future impact of a financial assessment. Today we have a special guest. We have Reza Jahangiri with us from AAG, or American Advisors Group.
Thanks for having me, Shannon.
Thanks for joining. I've known Reza for many, many years, and their company has built a very successful brand. Now, if you're saying, what brand? Well, I'll have to have two words for you. Fred Thompson, Senator Fred Thompson. We'll make it three. You guys have been very successful. You have a broad market presence and name recognition, so congratulations.
Thank you.
So what are you feeling? We're in a very turbulent market.
So to state the obvious, Shannon, we've been in a contraction phase the last 5 years, since '09. And what's different, I think, than from the beginning of the contraction phase is we've had kind of a changing of the guards, the type of entities that are in the business. I think they're very long. You've lost the bigger entities that were out of the game for primarily headline risk, the big three, the big banks.
Yeah.
You've had a slew of policy changes in the last 5 years, and most materially and substantively, it's been the last year, the most recent 2013 changes of the utilization restriction. Of course, there was a PL cut to right-size the MMI fund in connection with our book, and most recently the NBS guidance and the FA that's going to be coming out later this year.
So the non-borrowing spouse, NBS, and then the other one was
the financial assessment to solve the tax and insurance delinquency issue. So from an opportunistic standpoint, you have a lot of the major structural issues of the program addressed just in the last 12, 18 months. And FHA has been very active in making these changes. They've been very tough from a short-term standpoint because they impact UPBs, they impact unit volume, they impact our economics in the short run. But in the long run, they take away a lot of the headwinds that will be creating more opportunity for higher penetration rates of the demographic. And that's what we've been needing. The pie's been shrinking, we need to grow the pie, but we can't have these looming issues where regulators, consumer groups, media attack us. And I think that's what we've been doing a good job of the last year or two addressing those, namely FHA addressing them. And we're set for kind of a reset year in 14 to kind of adjust to the changes. But from there, from 15 on, we're going to be we're predicting sustained growth. I don't know how steep it's going to be, but we're going to be predicting sustained growth.
Do you feel like these are steps that are going to make us closer to becoming a mainstream product at some point in the future? Is this going to shorten the timeline of us becoming a mainstream product?
It's a good question. It's one of the primary ingredients is removing the headwinds for growth for us. There's other ingredients as well too, but it is one of the substantive ingredients, I believe, because every time you have some momentum in the industry, take 2 steps forward, you get hit by the media or an AARP suit or whatever it is, if it's FHA being sued or industry issues, there's 3 steps back taken. Consumers see that, and their perception of the product changes. And we, as it is, have a we have a relatively complex product. We're dealing with seniors, and we need to be mindful that we need to have pretty much a pristine reputation. Even statistically, if it's insignificant, it still impacts us when we have media hits. So we have to really have a, structurally very strong product and position. And I think we've done a good job addressing that most recently.